Here's the trades that I took today for a profit of $500. We have news at 10 o'clock, so I wanted to make sure I could try and get my trade done beforehand. I think in the beginning I was looking for a long, and I realized price did not want to go up, so I did enter a short position, and I am going to show you the breaker here. So here is a 5-minute bearish breaker. So as you can see, price returned to this area and then breaks down. And so I am just going to label this as my 5-minute breaker. I'm also going to outline it red because I like to keep my color scheme. It helps me to quickly identify what's happening on the chart, and it helps me to read price action and to make decisions faster. And so when we switch to a 15-minute chart, I'm going to point out the sell side liquidity. I first like to come down to my first level of where I think price could go. Sometimes it will go to that first level and then retrace back up, or it will take out the second level. I can never really be sure, so I generally like to exit at the first level. And then here's my second level of sell side liquidity. And so I am outlining it here. And as you can see, price did go down to that level, and now it is retracing up. For my sell side liquidity, I like to use a red line. And I generally like to keep it dashed so that it's not too visually heavy for me on the chart, but I do like to note those and try and pinpoint them as precisely as I can. And so I will outline both levels of sell side liquidity, and as you can see, price is reacting pretty well to these areas. It came down and took out that second level of liquidity, and it looks like price is returning back up or retracing. Now, given the time of day, it will probably retrace up a little bit before the market opens, and then start to either go up a little bit and then tank during the 10 o'clock news. So I just like to keep my eyes on all of it. I also did note some gaps below, so a fair value gap. So I think I'm going to change the chart to a 60-minute chart, and here you can see there's a gap in price. And so these fair value gaps are often, you can think of them as magnets or like pulls on liquidity. Price wants to go to those areas and fill in those areas. You can think of it as orders are waiting in this area, and so price wants to go down there and fill them. That's generally how I like to think of it, as a magnet. At some point, price is going to go down there and fill that area. And because I think the market runs on an algorithm, they are scheduled after certain markers are hit, and usually those are based on time and price, hence the name of the channel. So here I'm just outlining this 60-minute fair value gap. So that's the trade that I took today. Here they are again. I hope that you found this information helpful. Leave me a comment below or a question. I will continue to post these as I am on my trading journey. 10 before 10.